how would you characterize the trajectory of rates? I know you've got some forecasts as to where the fixed may wind up at the end of the year.
Yes, although there has been a little uptick in the last few weeks, we're still at historically low levels where you can get a 30-year 0-point mortgage for 3.25%, which while up a little is still historically low. And if you can afford the payment on a 15-year, you're down at 2.5%. So still historically low, just not quite the lowest ever.
Yeah. I mean, at this point, given how many opportunities there were to refi almost generationally, is it your sense that everybody who had a chance took the chance?
No. And the reason I say that is that even though refinance applications are down a little, they were up 50% last week versus the same week last year. So I do think that there are some borrowers who try to time it perfectly and hit the absolute bottom. We've jumped off the bottom a little, and I think there are still borrowers out there who could benefit from a refinance at these low rates. So while we do expect a drop in refinances this year, we still think we're going to do almost $1.5 trillion in refinances. Of course, more loaded to the front half of the year, but still a tremendously high volume by historical terms.
Interesting. I saw some data last week looking at the amount of at least U.S. inventory that has not been built yet is climbing to some pretty amazing numbers. I think 20+% has not started construction. How much of the lack of inventory do you think is dragging on demand?
Well, absolutely, inventory is a critical part of the equation. And on existing homes, we're down, I think it's down to 1.5 months supply, which is a really low level historically. And houses are just flying off the market. So on the existing side, inventories are very low. And on the new construction side, the builders are building at a much higher rate than they have over the last few years. But they have been building at a rate that was too low for a long time since the financial crisis. So it'll take a while to come out of that. But there is progress as builders are responding to the demand and building more houses. But we're still certainly in a very tight supply environment.
Bob, I realize that rates are still historically low right now, but as we do start to see them move higher, I wonder what this means for the price situation. I mean, certainly here in the New York metro area, for example, prices have just been frothy, to say the least. And I wonder, as you start to see the expense of actually carrying a mortgage begin to creep up, what that's going to do to that mix.
Well, they're certainly interrelated, and we've been fortunate that the low cost of financing has actually improved affordability despite the rise in prices. Now, as mortgage rates go up a little, that will be a little bit less easy to maintain. But it has definitely been a help for borrowers that despite the higher prices caused by the supply constraints that I just mentioned, the monthly payment has remained affordable. So we'll see where it goes, but they are two very interrelated items, as you mentioned.
Finally, Bob, you know, as the market continues to watch at least this hopefully last round, I guess, of stimulus work its way around the hill, where are we on forbearance and the number of households that had to rely on forgiveness or assistance to stay in their homes?
Well, I'll quickly say it's not forgiveness, it's delaying the payment. And we went up as high as about 4.75 million borrowers, or over 8% of the market, had gone into forbearance. We're now down to about 2.7 million. So about 40% of the borrowers who went into forbearance have successfully exited. And the administration has recently extended forbearance to up to 18 months, which will take us 6 months past now. So presumably the economy will be in better shape then. And to the degree that borrowers have trouble getting out of forbearance even then, the legislation you just mentioned, MBA successfully advocated for $10 billion of homeowner assistance to be allocated to the states. So if you do have a borrower who has trouble coming out of forbearance, there will be assistance in this bill, which we appreciate very much.
Shepard Smith here. Thanks for watching CNBC on YouTube.